Hello and welcome to Martin Lucas Investor. My name is Sensei and you are watching the morning forecast show. Thank you everyone for tuning in. As always, we get our information from the newsletter. That's where we're going to go first. Let's go into the title of today, which is it a bull trap or is it a bottom? If you have just tuned in, hit the like button. If you do want to get the newsletter, there is a 7-day free trial. First link in the description. Morning forecast, Monday, the 22nd of December. We had an interesting week last week, especially Thursday, Friday with the Bank of Japan. As I've said the whole time during the show, before the show, I gave it maybe a 15-20% chance that we would actually have a correction based off that Bank of Japan announcement. As I said, I'm 80% invested. If we do go down, I do have opportunity to buy the market either with cash, liquidate gold, liquidate silver, buy in, sell bonds, buy in. So I always like to be invested, and I made it very clear to you guys that I am invested right now. And that if we go further down, I'll buy more. That was made clear during the show multiple times, in the newsletter multiple times. And now we are basically rallying, and the carry trade is still active. I don't think this is a reason to be out the markets, in my opinion. And we're going to take a look into the data and what it means. Is the carry trade still active? Do we need to be concerned? Is this a bull trap, this little move up? Or have we bottomed? We'll look into that. So if you have just tuned in, make sure you hit the like button. Make sure you have subscribed. Let's get into this morning's show. It's Christmas this week. It's very exciting. If you haven't got your Christmas mugs, go and make sure you get it. I don't think there's too many left now. Go to martinlucasshop.com and there is the link over there. There's also some XRP merchandise on that store as well. But right now we've got our Christmas mugs, our Christmas collection. Let me see if I can actually bring that onto the screen. If I go over here for a second and bring that up. Let me go to martinlucasshop.com. There it is. But let me do it over here. Here's martinlucasshop.com. You can see we've got our Christmas collection over here, our Christmas mugs. You can get it in the 11 ounce. You can get it in the latte mug, the biggest one, the 17 ounce, or the large normal mug, the 15 ounce. Go and check them out. These do get shipped very quickly. You should get it. Actually, it's Christmas this week, so you might get it right after Christmas, but it's still definitely worth grabbing this year's Christmas mugs. These are always turned into collector's items as well. So there you go. Go and grab your Christmas mug. That's me, Martin, and Vaz when we met up. And now we've got our Christmas jumpers on. So do go and check that out. martinlucasshop.com. Someone says, I was correct about the carry trade then. XRP will be used by Japan to move transactions. Media digitizing. In what world did I just say that? How does that mean you're correct? How does that mean you're correct? Just because they didn't give any indication towards the upside for rate hikes up to 2% or 2.5%, how does that mean you're right about XRP will be used by Japan to move transactions, and that's why we're up. The argument there was people were saying XRP will go to $100, $1,000 because of that. That's not happened. Very unlikely Japan is going to be using XRP to move transactions anytime soon within this carry trade dilemma that we're seeing this year and probably in 2026 continue to unfold. So I don't know what you mean by that comment. Good morning from Fort Lauderdale. Welcome in, Guy. Us printing money will impact positively. Sorry, US money printing will impact positively. Yeah, it will. Long term, not really, but in the short term, yes. Money printing, obviously, it's liquidity for the markets. But anyway, let's go into our main story today, which is about the Japan carry trade and just unwind. Excuse the pun, unwind what happened last week. So our top stories this week or today are: silver hits a record $69 high, Trump blockades Venezuela's oil tankers, EU backs digital euro mandate, Wall Street faces AI volatility, yen falls after Bank of Japan hike, which is obviously a little bit concerning because they raised rates so that yen will go up, decoding the Bank of Japan strategic hike. The one big thing today, it's all about Bank of Japan. We wanted to cover the Bank of Japan, everything you need to know about it. It was in the newsletter last week. We covered it on the show last week as well. Now I want you guys to understand what that was all about, what we can take away from his speech, the rate hike, why the markets haven't crashed. If you guys thought that, I don't think it would. So let's try and unwind that a little bit more. So the Bank of Japan strategic tightrope. The Bank of Japan raised interest rates to 0.75%. We covered it. It was a 10-hour long stream. I hope you guys enjoyed it. It's its highest level in 30 years. So obviously, that is structurally going to change things. This is why we care about this, because 30-year highs, obviously something is breaking, something's going wrong, things are changing. Doesn't mean we're going to crash. Doesn't mean we shouldn't care about it. Well, 30-year highs on Japanese interest rates was definitely worth covering, worth doing a 10-hour stream for. But let's understand it a bit more deeply. So they've raised it to 30-year highs, while still simultaneously signaling a slow and cautious path forward. This dovish hike, it was a dovish hike, so it was a hike, but they were fairly dovish, aims to curb persistent 3% wage-driven inflation without triggering a chaotic collapse of global carry trade. By maintaining negative real rates, the central bank preserves the profitability of borrowing yen to fund higher-yielding assets abroad. However, the strategy remains fragile due to Japan's massive debt and the risk of sudden liquidity squeezes if currency swaps, if the currency swap markets. Sorry, I apologize. I read that wrong. Sorry, sudden liquidity squeezes in the currency swap markets. This gets a little bit complicated because it's not just about, and that's what I was thinking about in the background. It's not just about Japanese rates are at 0.75%. You can get 3.5% on US bonds. The carry trade is still active. It's not just about those two numbers. There's this thing called the forex market, and you basically do the trade the day before, and then you rely on the liquidity and the rates of the day after. And those rates can be very volatile, especially if there's a lot of volatility or if a liquidity squeeze happens. So if these liquidity squeeze happens, your margin rate or the amount that you're borrowing skyrockets, and then that's when the carry trade unwinds. It's not just as simple as 0.75% in Japan, 3.5% in the US. The carry trade is still active. It also depends on volatility, liquidity, and the next day rates on the forex market. Investors must now watch the 150 USD Japanese yen level, as strengthening yen could force systematic liquidation of global risk assets. So that's the one big thing. That's just to give you an idea of what's going on. The stock market is no longer in the fear category, and the cryptocurrency market is not in extreme fear anymore. It is in the fear level. The number you need to know today is 1 to 2.5%. That's the number where we imagine the Bank of Japan is raising rates. So that's the only indication we've ever got, 1% to 2.5%. what we were hoping for, or what we were looking out for last week when we were covering this event, was Governor Udia going to signal that it's going to be closer to 1% or closer to 2.5%? If he was going to signal it's close to 2.5%, we would have the carry trade unwind pretty quickly. If he was going to signal it's only going to be 1%, the carry trade could continue. But he didn't give us any indication. The Bank of Japan's estimate neutral rate sits between 1% and 2.5%. Governor Uda's emphasized a gradual approach to reaching this range, signaling that future adjustments will be cautious to avoid destabilizing leveraged market positions. We've got some comments coming in from Martyn. Let me see if I can read these as they come through. Martyn has just said, "So we're clear. I am still out. 288,000 in T-bills. We'll pick up Coca-Cola if it keeps selling as investors move back to tech and crypto." And then Martyn said, "The carry trade is worse than first thought. We now know Japan wants to raise rates more. It's more of a reversal of policy, not just the rate amount." There's Martyn's thoughts on that for you guys. I just wanted to keep you guys up to date with what Martyn's saying. Here's the winners and losers today. Obviously, some of these are up 40%, some are up 10%. We've got Surf Air Mobility, something that Vaz covers, up 10% on strategic transition there. What else do we have? I'll leave that for you guys to have a look at. We've got silver hitting $69 today. We've got more comments coming in from Martyn. Japan are not using XRP to ward off the carry trade unwind. We have trolls in the channel spreading false information. The promote channels pumping a self-interest. Yes. Guys, we've said this over and over again. XRP is not going to be the solution to the carry trade. That's not how this works. We've got silver just hitting $69 today. That is all-time highs once again on silver, up another 2.68%. This is better than most people's portfolios. How much is this up year to date? 138%. How bullish have we been on silver? Ultra bullish. How long ago were we bullish on silver? A couple years ago when silver was under $20. 2023 or 2022, we were buying silver under $20. The massive breakout we covered was at $30. The final level was $37. And now where are we? $68. $37 was this year. $30 was this year. We were bullish on silver. And now we have hit our first target. The risk to reward in silver is diminishing. When we were saying $100 at $20, people thought we were crazy. Now everyone's calling for $100. Does that mean $100 will happen, won't happen? I still think $100 will happen, but we're now at $70. The risk to reward is now diminishing for silver. But I am still bullish on silver. I haven't personally sold any silver. I will if there's an opportunities in the market. I'll rotate out of silver and go into the market. I might consider selling some silver now at $69 as well. But there we go, keeping you updated on that. Gold up 1.67%. What did we say? Gold is going to top out at $638. It's going to drop back down to $4,000. Yes, it's going to go under a little bit. This is all. I love how the fact that every single one of our shows are going to stay on YouTube because people can go back and fact check. Gold, we said it will correct. Where's it going to correct to? Near 4,000. But yes, it is going to go down below it. We did say it's going to try and find a quick bottom, get back above it, go to the heart line, and then finally break out of 4,441 to go into its next level of 4,700. We are seeing that breakout today. Congratulations, all gold holders. XRP, it is now fighting a very important downward slope and a very important. Let me get rid of these over here. If you did see our XRP weekly newsletter, you would have had all those levels and zones. It is free for everyone. Go and make sure you are subscribed to newsletter, even on the free plan. There's a free trial. Oh, that's the wrong link. Let me get rid of that. Where's my link gone? If you do want to go check out the XRP weekly newsletter, that came out yesterday. You can still go and grab it if you have just become a member today as well. But every week, we are the first ever people to do an XRP weekly newsletter. And I had all my levels on this week's newsletter. The link is in the live chat now. So XRP is now trying to break down this downward slope. We have strong resistance above 170, 197, $2. We are expecting to hopefully break that level and go to $2.30. But if we don't break that level, we do have further targets on the downside if we are going to continue into a bear market. Or remember, there's lots of whales are selling around the $2 level as well. They're selling into that into the ETF inflows. Go check out yesterday's newsletter to understand a bit more about that. We will have a quick look at it as well. Let me go back to some of these stories and go over to Bank of Japan. We've got that naval blockade going on with Trump right now, but again, Venezuela, 1% of the world's oil production. It's not the biggest problem, but yes, it is a geopolitical situation as well, not only an oil crisis that some people are calling for. I don't think this is an oil crisis. It's a very small amount of the world's oil production. Yes, oil is also double bottoming. That's more of a technical level, so it might play into that. I do think oil will actually go up, but not really based off this, more based off the technicals, because oil has been oversold. It's looking to double bottom. If I bring you the oil chart over here, we did have this in the newsletter at $55, a double bottom on oil. We can go all the way back up to $64 to then come back down. But yes, oil, I think it will have a short-term reversal over here and then continue its downtrend. So yeah, that's the story. There's all these stories you guys need to go and check out. We've got Europe green lights the digital euro, so the digital euro is on the way. We've got this, obviously, this big AI tug of war going on. An interesting story there for you guys. But let's go over to the yen. I'm going to reiterate, I'm not bearish on the carry trade. I am not calling for a massive crash. That's my opinion. Your opinion might be different. Martyn's opinion might be different. We might all have different opinions. I don't think, and I said this before the show on Thursday. During the show on Thursday, I said it's very unlikely we'll get a crash based off this yen carry trade because we're expecting a dovish hike. Let me tell you a bit more about the story. So the Bank of Japan just pulled the trigger on a historic hike. But the market isn't buying into the drama. On Friday, December the 19th, the Bank of Japan raised the policy rate to 0.75%, a 3-decade high. Yet, Monday morning, the yen has collapsed instead of rallying. The culprit is Governor Udio's notably cautious tone during his press conference. He was very cautious during his press conference. He didn't want to give anything away. He didn't say anything about raising the rates further. He didn't say anything about what rate he's going to raise it to. He said he's going to take it one at a time. He didn't signal that there's going to be a lot of rate hikes, and the market liked his neutral tone. So the culprit is Governor Udio's notably cautious tone during his press conference. He offered zero guidance on future hikes, signaling a one-and-done stance that left the yen vulnerable. We all know that there's going to be more hikes, but he didn't want to give that away, and the market took that as a sign that they can still continue with the carry trade. As a result, the euro-yen pair hit a record high of 184, while the Swiss franc yen reached 198. Traders are essentially betting that Japan's rates will stay frozen while the rest of the world remains higher. The disconnect stems from a growing tug-of-war between Bank of Japan and the Prime Minister's government. While the central bank is trying to tap the brakes on inflation, Takeaki, the Prime Minister, is slamming the gas with fiscal policy, including a record 120 trillion yen budget for 2026. This massive spending makes it impossible for the Bank of Japan to stay aggressive without crashing the bond market. For retail investors, this means the carry trade borrowing cheap yen to invest elsewhere is very much alive. And this is what I was trying to say on Thursday. Yes, this carry trade situation is awful. It's going to unwind. There is a massive problem in Japan. However, for now, the carry trade remains active. The carry trade, no one is panicking. The VIX is low. People are still borrowing. There's still a massive gain to make with the carry trade. And there's no major indication, or there wasn't any hawkishness from the Bank of Japan governor saying that the interest rates are going to be closer to the 2% or that we're going to continue aggressively with interest rate hikes. So, the dovish hike, decoding the Bank of Japan strategic tightrope. On December I've got some comments coming in. Let me read this. Please be polite. One more rude comment and I'll time you out. We've got a comment here from Martyn. Media numbers are not getting annoyed with my news. We have record members and members growth. You're not a member and you are promotion of self-interest channels. I like them. I'm letting you speak. Oh, unlike them, I'm letting you speak. Unlike them, I'm letting you speak. Yes, we do invite everyone here. However, there is a limit. We don't allow swearing. We don't allow aggressiveness. We don't like a lot of fake news because we don't want anyone to lose out, our members. But yeah, we welcome everyone on this channel. What are we buying today? Let everyone know in the chat. Wasn't XRP released in 2012? Yes. I believe Martyn Lucas Investor predicts crypto might go down 80%. But I might have missed what he thinks, what degree XRP will go down if a crash hits. If we do get a proper bear market, if we do get a crash, we get a carry trade unwind, all of the AI bubble collapses, yes, XRP can go 80% down from here. Not even from the top, it can go down 80% from here. If we get everything go bad. But if we're looking at normal bear market, we can go 80% down from top to bottom very, very easily. So yeah, I agree with Martyn. The dovish hike. So let me talk to you a bit more about Bank of Japan. Remember, we covered it on Thursday. I was pretty bullish going into it. I in terms of levels I want to buy, I had my levels set up. I was continuing to invest in the market because I'm looking long term and I'm just looking to buy if we drop. If we didn't drop, I'm still 80% invested. I am benefiting from the rally. On December the 19th, 2025, the Bank of Japan executed a dovish hike, raising short-term interest rates by 25 basis points to 0.75%, the highest level in 3 decades. While the move itself was hawkish, Governor Udia's communication was maliciously calibrated to prevent market panic. That's why we didn't get anything, because he was very, very careful with his words. By emphasizing that real interest rates remain significantly negative and that policy will stay accommodative, the Bank of Japan effectively signaled a slow grind towards normalization rather than a rapid tightening cycle. They made it very clear that the way that they're looking to raise those rates is in a slow, controlled, accommodative manner that will slowly unwind the carry trade, that will prevent market panic, that will still allow the carry trade to continue for a period. This approach has allowed the yen carry trade a strategy where investors borrow cheap yen to fund high-yielding assets elsewhere to remain selective yet profitable. It is still profitable. It is still active. People are still in their trade. 75% of the carry trade is still active. Not much unwinding going on. And the way that speech was presented allows the carry trade to continue. And people have made the mistake time and time again, whether it was in 2022 when they were calling that bear market to continue, whether it was in 2020, that they just want the market to go down and they never managed to benefit. Remember in 2020, how many people thought we're going to continue to crash? They didn't believe that the market had recovered. They were still short on the market. They were still out of the market, and the market went mental, went to the upside. In 2022, we had a bear market. People were calling for the bear market to continue to the downside. They will continue to be not invested, and then we had another massive bull market. Now today, people are complaining about the AI bubble, the carry trade, overvaluations, China crisis, which are all real problems. However, when is when is one of those problems going to burst, and how much further are we going to go up in the markets? Who knows? No one knows the answer to the question. That's why my strategy primarily is be invested and buy on crashes. And the Bank of Japan, if we're looking at this specific issue of the carry trade, they're allowing it to continue. They're allowing the market not to be spooked. The VIX is low. The carry trade is active. The arbitrage is still there. And this might continue until the end of 2026, the middle of 2026. It might end next week. No one knows the answer to the question. However, right now, with what we can analyze from that speech, the way it was all worded, the way the policy looks, the VIX, And the forex markets are signaling the carry trade is very much still active and no need to panic yet. The core narrative is one of controlled deleveraging. The Bank of Japan is attempting to curb inflation without triggering a systematic liquidation of global risk assets that haunted markets in August of 2024. Remember, they saw how much power they have. They saw how bad it could be if they spook the markets like they did in 2024. It's not in their interest to do it, to spook the markets and get their stock market to come down 14% in a day. So they will try and actively not do that again. Key drivers and analysis. So, number one, autonomy of the dovish communication strategy. Governor Udia's primary objective during December's press conference was to neutralize shock of the rate hike through aggressive opportunality. He described the tightening as gradual and cautious, making it clear that the Bank of Japan is not in a hurry to reach the neutral rate of 1% to 2.5%. By stating that future adjustments will depend entirely on economic price and financial developments at each meeting, the Bank of Japan has successfully avoided pre-committing to the January or April move. Institutions now suggest that the next hike may not materialize until June of 2026. And this is what I mean. If everyone starts being on the sidelines and starts waiting for the next rate hike and the next meeting, the markets are now anticipating it's not going to be in January, it's not going to be in April, it could be in June of next year. That's 6-7 months of gains that there might be in the markets that you might miss out on just because you want to be on the sideline or shorting the market. That's why I'm always in, 80% invested. I'll buy if we go down. This hedging allows the market to price in a period of stability, preventing a reflexive spike in the yen that could otherwise crush leverage positions. So, very, very careful with his words. He said he's going to be gradual and cautious. He said he's going to take it meeting by meeting. He said he's going to look at the economic price and financial developments. He said he's not going to pre-commit to any rate hikes. He didn't give any indication that it's going to be on the higher side of it, 2.5% or 1%. But at the same time, I don't want to tell you guys that there's not ever going to be a carry trade unwind. As I've always said, a 20% chance that this collapses in quite a bad way. If we get an indication it's going to be towards a 2.5%, if the yen starts weakening quite aggressively, if the forex markets start increasing the margin requirement for the exchange, if the VIX goes through the roof on this, if people start panicking, unwinding, AI bubble, China crisis, if that all happens at the same time, which I assign myself a dubious speculation of about 20% that can occur, we can have a big correction on our hands. And of course, I want to capitalize on that. And that's why I've got some money in bonds, some money in cash, some money in gold and silver to take advantage of that. So yes, there is a clear issue going on. There is a clear risk in the markets. It could be a very big risk. It could be a small risk. It could be a big correction. It could be a small correction. Or we can continue to rally and the markets can continue to be ignoring this until reality hits, maybe later in 2026 or early in 2026. My strategy is always be invested, buy on the dip. If I'm very, very confident we're in a bear market, then I'll sell more of my position. If I'm very, very confident we're in a bull market and we're about to peak, then I'll sell a bit of my position. If I'm very, very confident that we're bottoming out in a bear market, then I'll be more invested. But in general, I'm invested, looking to buy at lower levels. And I think it makes sense in this situation. For me, anyway, again, I don't give financial advice. Everyone's opinions are different. Your strategy might be different based off your own portfolio. I'm just sharing my perspective. If you have just tuned in, please do hit that like button. Please do subscribe. I'm going to go through all your comments shortly as well. So the persistence of the selective carry trade. The carry trade is far from dead. We've got a special guest on the show.
Marty donated £2 through a super chat. Is there another currency like yen to cover this?
Not really. We don't have many currencies. I'm trying to think around the world. Negative interest rate. No, Japan is literally a massive outlier, at least in the developed world. Um, even in the even in third world countries, you would imagine that most of their currencies are inflating. They probably get interest rates of 30-40% on their currency because they're inflating quite badly. In the modern, sorry, in the developed world, I don't think there's a single other currency that's negative 0%, 0.25%, like Japan. So no, I don't think there's a carry trade. There might be small different markets people arbitrage, but to the extent of Japan, there's no other market. But thank you, C. Marty, for the question. No, it's not a silly question. It's an interesting question. I'm probably going to check it myself later. But yeah, if there was, we would know more about it and I would be up to date with it. But there might be another currency that's close to 0% or 0.25%, but none to the magnitude of the carry trade and Japan. But yes, here's the warning. The carry trade is far from dead. It's merely undergoing a transition towards quality. Despite the hike, the math remains compelling for participants. And again, sorry, this isn't the warning part. This is me saying that the carry trade is very much still active. With the 10-year Treasury yielding approximately 4.1% and the Bank of Japan rate at 0.75%, the spread remains wide enough to justify the cost of borrowing the yen. 4.1% Treasury yields are giving you. Bank of Japan, you can get the yen, borrow it for 0.75%, there's still an over 2% yield there. The spread remains wide enough to justify the cost of borrowing yen. However, the trade has become increasingly selective. Emerging market shift. Dealers report significant returns, roughly 7.5% from yen-funded carry trades into Latin American currencies like Mexican pesos or Brazilian real since April of 2025. Tech and beta. We've got US growth equities and high beta assets continuing to benefit from yen funding through assets like Bitcoin showed temporary weakness. We saw that as Bitcoin dropped during that decision a little bit, but then rallied after. The volatility anchor, as long as the VIX remains below 20, the incentive to stay in these trades remains high. The danger arises only when a sudden spike in volatility forces margin calls, transforming a profitable spread into a liquidity trap. This is all on a knife's edge. Right now it's fine, and it can be fine for another year, and it can be fine forever, and it can slowly unwind. However, because it's on a knife's edge, if you get one little bit of an indication, if the yen collapses, if we get an indication that we're going to be close to 2%, if they do a surprise hike, that causes volatility, the VIX goes through the roof, the volatility causes margin calls, there will be a sudden spike in funding costs for your yen. That will cause liquidations. That will cause further liquidations, spiraling liquidations. That will cause the profit spread to evaporate. And that's when you'll get the carry trade unwind pretty quickly. So it's all on a knife's edge, but right now it's on the right side. And it could be on the right side for another year. So you never want to just be out because because you think this is going to collapse. This is not a guarantee. I assign a 20% chance. Someone else might assign a 50% chance. It's not a definite situation. What is pretty definite is that the market goes up over time. What's not definite is, are we going to get a crash based off this? The wage, number 3, the wage price, but I'm going to go to your questions as well because I want to make sure everyone's questions are answered. And then we're going to go over to Martyn in 20 minutes time. The wage price spiral and physical constraints. The why behind the Bank of Japan's continued tightening path lies in Japan's structural inflation. We know why they're raising it. It's inflation, it's CPI going up, it's the weak yen, it's the wage inflation. All of those reasons is why they have to raise the interest rates to strengthen their yen and to bring down their inflation. The most critical yet hidden mechanics in the current market is the use of FX swaps for synthetic yen funding. Sophisticated investors often do not borrow yen directly from a bank. That's not how it works. Instead, they use currency swaps to exchange yen for dollars or other currencies, promising to swap them back later. When market volatility rises, the tomorrow next day rates in these swap markets can spike 50 to 100 basis points. This is the issue. It's not just someone going to Japanese bank, borrowing some yen, and just investing it in bonds. That's not really an issue. It's how most people do it. They use these swaps. They use these FX swaps. It's synthetic yen funding. They go and use these FX markets to borrow the yen. However, their funding rates can spike very quickly. And if volatility goes up, and that's why I keep mentioning the VIX, if the volatility rises, the rates in these swap markets can suddenly spike 50 to 100 basis points in a matter of hours. This creates a funding squeeze where the cost to maintain a position suddenly exceeds the yield it generates. So now it costs more to keep that position open than the amount you're actually making. And because so many of these trades are leveraged, these carry trades are highly leveraged, a spike, 50 basis points, 100 basis points, which can happen in a matter of hours, in these rate swaps acts as the first domino. It will force traders to sell their assets they bought, like the US tech or whatever, so that they can buy back the yen, so that they can close the swap. That creates a feedback loop of a strengthening yen, and when the yen strengthens, the asset prices fall, and then you get that domino effect. So that's how quickly things can unwind. If there is any volatility, any sudden surprises, that's how it happened in 2024. But remember, it's happened in 2024. The Bank of Japan is going to be a lot more cautious. Of course, they're going to have their interests, which is also they're going to control the economy and they're going to control inflation. So they're going to have to do what they have to do. However, it is still in their best interest not to crash the carry trade. So what I do expect is them to be very cautious with how they approach this. And if they're not cautious, then the whole thing unwinds. If they are continuing to be cautious and they don't freak out the markets, then the carry trade can stay open for another year and slowly unwind over time. Keep an eye on the 10-year yields in Japan, currently at 2%, 30-year highs. If we go to 2.1%, it's obviously a little bit more concerning. And then also watch the March meeting, the April meeting, the June meeting. We're going to be covering it and see how we emerge. But my main thing I'm saying is please be careful. Too many people in the past, COVID crash, they thought that the crash would continue and they didn't invest in the markets. They got left behind. 2022, there was a bear market. People kept calling for the bear market to go lower. They didn't invest. The bull market continued. Now there are real concerns in the market: AI, bubble, S&P overvaluation, the carry trade, China, wars, geopolitical situations. There are real concerns. Be aware of those concerns. Of course, be aware of those concerns. I'm one of the first people to tell you about all these concerns. However, I don't want you to just be left behind, because the market can be irrational. Even if there's a reason for the market to go down, we can continue going up. I don't give financial advice. I tell you what I do, and I don't want you to follow me. I'm invested in the markets. If we go down, I buy more. I'm a long-term investor. I will buy when we go down. I will stay invested in the markets. If I think we're severely overvalued, I will have less invested in the markets, but I'll still be invested. If I think we're severely undervalued, I'll be more invested in the markets. If in a situation like this, I'm 70, 80% invested in the markets, I've got money on the side to take advantage of any host of issues for the market to come down, whether it's a carry trade, geopolitical tensions, AI bubbles, or China housing. Be prepared for every scenario. Let me go over to our newsletter from yesterday as well. Please do go check out today's newsletter. There is actually a chart at the bottom for oil. There is other news stories we haven't covered. If I go over to here, we have the first ever XRP newsletter as well, weekly, coming out every Sunday. So go check it out. We had some big stories on the XRP front as well. I'm going to go into the question. Brian says, we need a live phone in as I have so many questions that need answering. The carry trade is so way more complicated than I first thought. It's very complicated. It's very complicated. I mean, I wouldn't even know the complete ins and outs. I researched this for 2 days continuously for the newsletter. I researched it after. I researched it 2 months ago. You learn something new every time. I try and break it down to the most simple way possible. But yes, I mean, if you look into it, I mean, you can write a whole university grade research paper on it 5 times. It's complicated. However, what's important to note is understanding the basics. Borrowing cheap yen to invest in better bonds, high yielding assets. It's a free cash machine, essentially, just pay them back. Now the rates are going up. It causes a concern because that there's not going to be that as much difference in those rates. But also, yes, there's more complicated things. That it's the FX market, it's the volatility, it's the funding rates behind the scenes that can cause all this. But again, it's as simple. I mean, you can just simplify this as simple as this: long-term investors don't lose, diversified portfolios don't lose. When you go down, when there's crashes, if you buy, you take advantage of the dips, and over time, you make money. So no matter what causes the market to go down, whether it's carry trade, AI, whatever, as long as you invest for the long term and you buy the dips, you're fine. In most scenarios, especially if you have a diversified asset portfolio, in theory, you're fine. So I don't think the audio on the newsletters works anymore. Really, Brian? The audio on the newsletter doesn't work anymore. Thanks for letting me know. Let me have a look. It's on the app where you can get the audio, isn't it? So let me just go into...
BOJ decision day. Yen carry trade cheat sheet. December 19th, 20.
I think it works. I think it works, Brian. Let me know why you don't think it works. Let me answer some questions and then let's go into this, some XRP news. If you have just tuned in, please do hit that like button and subscribe. If you haven't got the newsletter yet, you can get a 1-week free trial. Let me scroll through some of these. Hello, Mike. Hello, OF Norfolk. Songs for Spaces here. Yolanda is here. Good morning, Yolanda. Silver Days is here. It's Antonio says, morning, Sensei. Good morning. Media Digitizing is here. Welcome to the show. Brian is here. Brian Lethbridge says, you and I both know this is a bomb. The economy is all but cooked. The market's irrational. The market can easily be irrational. There could be all the problems facing you right head on. The market can continue to go up. Henrik is here. Jamie WP says, what do you think about Tilray Brands? I think it's a very high risk investment. If you like it, if you like the fundamentals, then you can put a small part of your portfolio into it. But there's been times where it's looked good value. I don't know if it is now. We looked at it 3 months ago. I think it rallied about 600% since those levels and then came back down. But yeah, I wouldn't put a significant amount of my portfolio into it. Rhino Skin says, hi everyone, hello. Let me just scroll through. Songs for Space says, hello Martyn Lucas, happy Christmas. Yes, it's Christmas week, we're all looking forward to it. Brian says, XRP is a rail, read the room. I don't know what you mean by that. Tommy says, silver and gold and XRP. Yes, silver up, gold up, XRP up, we love it. No silver, no AI, says Brian Lethbridge. Brian Lethbridge says, XRP going to be a bank. Who else is doing that? XRP is not going to be a bank. XRP cannot be a bank. XRP is a token. You can't have a token being a bank. I think you might mean Ripple. Ripple the company. Brian Lethbridge, please let me just explain something to you because I don't think you understand it. Ripple is a company. XRP is a token. Ripple does not own XRP, the token. They own XRP in terms of their treasury. However, Ripple supports XRP's growth by working with developers. XRP is not a share of Ripple. Ripple is a company. XRP is a technology. Ripple is a if it IPOs, it's a stock you can invest in. If you're a private investor, you can buy the company. Buying XRP is just buying a token. XRP cannot be a bank because XRP is a token. It does make no sense for it to say the statement XRP is going to be a bank. It is physically impossible. Martyn Lucas Investor says, yeah, we've read that. What are you buying today? I'm not buying anything. We're hoping to launch the portfolio challenge in the new year. So after we're back from after I'm back from the Christmas/New Year break, I don't know what days are bank holidays, but essentially once we're back from this period, I think January the 1st is a bank holiday, so maybe January the 2nd will be the launch of the portfolio challenge, and then I'll be showing you my portfolio. Fruit says no racism, please. It's who's being racist? Someone being racist in the chat? We don't tolerate any racism on this channel, not at all. If you have a difference of opinion, he labels you a troll. No, I don't think so. No, Martyn doesn't label someone that just has a difference of opinion as a troll. That's not right. We welcome everyone on this channel. Wasn't XRP released in 2012? I think so. I'm here to listen to Sensei's view. This ongoing argument is distracting. What argument? Oh, in the chat, yeah. I think he's gone now. How goes? Hi Sensei. Hello, Bitcoin's Craig. Revved Up Biker is here. Brian is here. I'm still all in. Good luck to you, Brian. Brian, we did try and warn you. I know, I think a month ago you said XRP is 100% going to be at $10 by the end of the year. I kept trying to say there's no chance. There's no chance. There's no chance. I was hoping that would help help your situation. But again, we will learn. I think you were expecting XRP to be at $10. That's why you're still fully invested. That's what you were hoping for. That's what you were expecting. But there was no way that was going to happen when we started. When we were about 2 months away from December. I'm still buying XRP on these drops. Morning Spud Fam says Bitcoin's Craig. I agree, media. Let me get to the bottom. Bitcoin's Craig says I saw a Toyota crash today. Brian says we all know that crypto drops 40, 50, 60, 80%. It will eventually go back up the same point like it always does. Not all cryptos, but the main ones. I agree. Actually, very few, maybe like 3 or 4 or 10 or 20 cryptos will make new all-time highs. Most of them won't. Vinman says, with the Genius Act allowing banks to issue stablecoins, giving them clients at a 1-to-1 ratio, taking their money to T-bills, loan out the money they get from T-bills multiple times. Would this add liquidity? Giving their client... taking their money to buy T-bills, loan out that money... No, they can't loan out the money they get from T-bills. Oh wait, sorry. So you're saying a bank will issue stablecoins, giving their clients a 1-to-1 ratio, taking their money to buy T-bills. So you're saying someone's going to go out, buy T-bills, get about maybe 4%, loan out the money they get from T-bills. So they get 4.1% on T-bills. They loan out that money for 5%, 6%, multiple times. Would this add liquidity? Yeah, I guess so. There'll be more money in the system. Kanzansky says, afternoon guys, how you doing? Doing well. Thank you for joining our show. Brian says, Sensei, you and Martyn should go live together and do a call-in. I will definitely call in and put my thoughts to you both. Thank you very much for the suggestion. We always do live call-ins together, me and Martyn. The next time we'll invite you on, Brian. C. Marty says, might be a silly question. No, thank you for the support in the super chat. It wasn't a silly question. Kinzansky says, we're allowed to disagree. We're allowed to be wrong. Nobody has to follow anyone's opinions. Be respectful. Take responsibility for your own actions. Exactly. Oh, you're online. Hello to everyone. Hello, Liz. How are you doing? Brian says, I agree. Martyn is looking to buy Coca-Cola now that it's dipped below $17. Oh, Martyn has bought $25,000 of Coca-Cola at $69.99. It's going to go lower. Martyn says time et al. Let's have a look at the Coca-Cola chart. Let's give our opinion on it. Coca-Cola. We'll be going live to Martyn in about 5 minutes. So that's when you guys can hear all about that. Remember that amazing trade Martyn took on Coca-Cola or told us all about. And the charts lined up exactly with that. We're looking at support around $66, $66. Break of the downwards trend. The target was $70. We went all the way up to $73. Now we're at $70 again. Would I say the charts are showing the same thing this time round? I think we can go lower. I think we can go to $68. If we break the downward slope, we can go to $66. But yeah, I don't think the chart has the same setup as last time. Last time that trade was absolutely amazing. I'm sure all of you remember Martyn's trade on Coca-Cola. That was about 10% in 7 days, something like that. But right now, just quick look at the charts. I don't think we've got a same scenario on the charts anyway. So it's going to go lower. Martyn, time it out. Yeah, it can certainly go lower. I'm sure Martyn also knows it can go lower. No one knows exactly what's going to happen. Sol says, including gold. Kanzansky says, thanks, Martyn. I may top up Coca-Cola. Brian says, Martyn and you just trading in and out quick at the moment. Martyn and you just trading in and out to make quick profit. I'm not trading in and out. I literally have not traded in and out. The last trade I made was probably at my last long-term trade was about $3.30 when I sold about 20% of my spot XRP position. My other trade was, what's the main other trade I did? October the 11th, I bought that XRP dip to 170, sold at 230. I haven't made, I don't like, I don't prefer day trading anymore. Yes, I will do some trades here and there, but I haven't been trading in and out. Brian, I don't know what you mean by that. Yeah. Bitcoin's Craig says Coca-Cola just gone low of the 50 EMA and the daily timeframes. It may go to the edge of the cloud of 69.966 or the 200 EMA at 69.10. It's a hold unless it comes above the 50 EMA. Just my opinion. Thank you, Bitcoin's Craig. Yeah, I'm not looking to buy. I might be looking to hold, but I'm not looking to buy. Brian says we need a live phone in. I have so many questions that need answering. Next time we do one, Brian, we will definitely invite you on. The carry trade is way more complicated. I answered that. Sensei, I think that I answered that. Kazansky says, absolutely, Brian. It's not just the yen. We have to watch the VIX, S&P 500, and NASDAQ. Yep, you have to watch it all. But just be prepared for all. If you just look at your portfolio and you look at it and go, if it goes down 10%, what am I going to do? If it goes down 20%, what am I going to do? If it goes down to 40%, what am I going to do? If it goes up 100%, what am I going to do? If it doesn't have a dip, what am I going to do? If you're just prepared for all scenarios, prepared for the upside tomorrow, prepared for the downside tomorrow, prepared for the upside for a year's time, prepared for the downside in a year's time, different sort of percentage that your portfolio can go down, you'll be fine. You then don't need to look at every single one of them. Sensei, so appreciate this newsletter. Thank you so much, Brian. I'm glad you enjoyed the newsletter. Oh, Huang is here. Good morning. Lovely to see you here. Slim says afternoon. C. Marty says, why on earth are people claiming XRP will solve the XRP carry trade when it clearly wouldn't? I'm not sure. It's people want clicks. Well, I know why, because people just want to sell false narratives so they can make more money by selling whatever they're selling and getting clicks. Good morning. Are we waiting on GDP report today? I don't think the GDP report is today. I think that is tomorrow. Let me just refresh this. GDP is, I think it's tomorrow, no? No, it's PCE is tomorrow. Oh, it's in yesterday's news. Let me go over to the newsletter. All in the newsletter. Today, oh, it's UK GDP, but we've already got that. Tuesday, so tomorrow is US GDP. That is tomorrow. Yeah, we're waiting. Tomorrow's going to be a big day. US GDP and PCE. So join me tomorrow morning for that show. I'm chilled about every scenario. This isn't my first rodeo. I'm chilled about every scenario. This is my first rodeo with XRP. I've been holding since 2018. Sick Boy Customs knows exactly what to do. Martyn will be live in about 2 minutes' time. Why on earth are people claiming XRP will solve the carry trade? And clearly, oh, where was I? People still think the Earth is flat, says Kazansky. Brian says, yes, it does. Not clicking the right button. Oh, don't worry, Brian. Sick Boy Custom says, I'm chilled about every scenario. This is my first rodeo. Exactly. Potato Family says, okay, since I'm doing a detox this week, signing off YouTube and my trades. It's always great to do a detox, especially from the trades. Good luck to you, and what a week to do it. Spend some time with the family. And your friends and your loved ones. Sam Dirk says, good morning. Brian says, yep, you're right, Sensei. And I did have a bet with you. Remember, I owe you $1. Brian, I love it. You don't owe me anything. Stu says, is the crypto crash still brewing? Is another crash on the horizon? Um, I don't know. I can't answer. Have you sold all your crypto, Sensei? No, I have not, but I also am prepared for crypto to go down. So I did not mean you. Martyn meant just Martyn. No worries. Japanese minister was pissed about Friday's USD strength on the rate hike. They just kicked off the unwind to serious FX trading. No, no, you didn't need to do that.
At Brian D'Alessandro donated £2 through a super chat. I lost the bet $10 XRP, so here is your money, lol.
Didn't need to do that, Brian. Thank you very much. GDP tomorrow. Yes, GDP is tomorrow. Rhett says, does the selling of crypto allow immediate loss recognition versus having to wait? I don't know the rules in the US. I'm here in the UK. We don't have such rules. Again, check online, check with your tax advisor. I don't give advice. Thank you everyone for tuning in. Go check out that XRP weekly newsletter. There's a lot of stories on that you might have missed. About Brad Garlinghouse, XRP, the ETF, the inflows. There's a poll that runs in it, and that poll will be running out soon. Are you feeling bullish or bearish about XRP going? Let me just give you the link for that specific newsletter. Go if you click on this, you can go to the weekly newsletter, fill out the poll, put your suggestion. I think there's about a few hours left for you guys to go into the comment section of that newsletter and put in your XRP price prediction for this Sunday. The winner gets a shout out, and go and check that out. Until next time, take care of yourselves and each other. This will take you directly to Martyn's stream. Remember, as I always said, I'm not too fearful about this carry trade. There's a lot of things in the market to be fearful, but if you're always going to be fearful, you might stay out the markets forever. The carry trade didn't spook the markets. Going into the carry trade, I said there's an 80% chance that we will, 80% chance that we just can continue towards the upside, 20% chance that we might have a more significant carry trade unwind correction. But yeah, it was that 80% played out. The markets are going up. And I'm not left on the side because I'm 80% invested, 20% ready for a crash. Everyone's strategy is different. Do what's right for you. Make sure you continue to educate yourselves on the market so you can make more informed decisions. Let's go over to Martyn now. Until next time, take care of yourselves and each other. Bye-bye.